Hello there. This is James, and you're watching OneRoyal, and it's live. In today's program, I want to discuss the absolute madness, which is this whole Trump tariff trade war and the effect it is having on the market. As well as that, I want to have a quick chat about a little bit of economic data, which was announced today, and potential implications of that on the market. And as always, have an open forum for anybody else's ideas and opinions. But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research, do your due diligence, and of course, know the risks at hand for entering any trade. With that out of the way, let's get started. So, indeed, the market really is going into the mouth of madness. And it just goes to illustrate what's happened over the last couple of trading sessions, that the market really, truly is a roller coaster. And to quote, is it a Boyzone song or a Ronan Keaton? You just have to ride it. Because let's just face it, let's just go over the madness of the first 4 months so far of 2025. Okay, let's do the timeline of this tariff trade war madness. For this, I'm going to need a little sip of coffee because, it's just, let's go over it together. Let's do the timeline. So, first off, 20th of January, Trump is sworn in and he announced plans to protect American workers. Then, on the 1st of February, he announces 25% levy on Canada and Mexico. Then, on the 3rd of February, Trump announces a 1-month pause on those tariffs. So, then, 10th of February, Trump announces 25% tariffs on steel and aluminium. Yes, it's aluminium, guys. That's how you say it. Then, on the 4th of March, Trump announces additional tariffs on China. Then, on the 26th of March, the White House announces 25% tariffs on cars and car parts entering the US. And then, the 2nd of April, Liberation Day, or also known as Annihilation Day for the market, where he announces massive tariffs against bad actors or countries he refers to as bad actors, and the market loses its mind. And on the 5th of April, 10% baseline tariff goes against all countries, comes into effect. Then, on the 9th of April, China announces 84% tariffs on the US. Because don't forget, at that point, Trump had increased his tariffs to 102% on China. So China retaliated yesterday. Remember, we discussed it in yesterday's video. So they then announced 84% tariffs on the US. And then, again, it's a roller coaster. Then, also on the 9th, Trump announces a 90-day pause on the major tariffs for all major countries except China, whose tariff is now raised to 125%. Then, today, EU retaliation tariffs, what they were going to do against the US, because he's put it on a 90-day pause, they have put it on a 90-day pause. So how does it actually look at the moment. This is how it practically stands. Though the higher tariffs, except for China, China is 125%, don't forget. But everybody else, okay, EU was going to be 20, Japan was going to be 24, Vietnam was 46, South Korea 25, Taiwan 32, India 26, UK 10, it stays 10, and Switzerland 31, and Thailand 36. They all pay 10% still. That still stays. That does not go. But China has gone up to 125%. So what was the initial reaction yesterday after Trump suddenly announced he was going to pause, 90-day pause on these big tariffs, apart from China? Well, as you might have guessed it, there was much rejoicing in the market, illustrating once again that indeed this trading arena at the moment is a roller coaster. Because yesterday the S&P 500 had its best rally since 2008. In fact, the S&P closed 9.5% higher, Nasdaq 12.2% higher, down 8% higher. And here's the thing, it carried on in the European session and the Asian session as well. European stocks rose by about 5%. So it's time to get out the bunting, right? However, the market is now started taking into account the escalation in the US trade war with China. And at the same time, as I just illustrated just a minute ago, 10% baseline tariff remains. 25% tariffs on steel and aluminium remains. 25% on cars and car parks. Car parts. Silly man. Car parts still exist. So the mood has totally shifted back again to uncertainty. Because at the end of the day, despite what Trump has just done with the 90-day pause on tariffs, we're not out of the woods yet. Because we just don't know what he's going to do. The market doesn't know. And the one thing the market gets so scared by and does not like at all is uncertainty. Yes, we'll have little bouts of much rejoicing when we get a little bit of good news. But then when we stop to take a breath, we have a look and say, hang on, there is still a lot of bad news. And what is the implications of this trade war with China? You've got the world's two biggest economies going head to head with each other. Like we said yesterday, it is like a new Cold War. It is. So this little bit of rejoicing which we had yesterday, reality kicks in. We are not out of the woods yet. And on that note, let's have a quick look at the market, where it stands currently at the moment. So S&P again, let's have a look straight away. Start with the S&P. I mean, this is on a 30-minute chart. Okay, so we had a real nice bull run yesterday. Like I said, one of the best rallies it's had since 2008. Opened today with a gap negative. Currently trading 2.8% negative. Currently down to 5.299. Yes, we're above the 5,000 level mark. Many say that was the level to buy for the dips. But at the moment, again, trepidation and uncertainty is set in. Same with the Nasdaq. Excuse me. Again, 12.2% up yesterday on the back of Trump delaying, those massive tariffs. Again, reality's kicked in, and again, we're down negative 18,505 points, down 3.33%. Volatility index, which had a bad day yesterday, as you would have guessed, because the market was feeling happy, is again up slightly, by not as dramatically, but up to 37.18. Gold is enjoying a good day, and this is what I said in my morning briefing this morning. I spoke about this. I said that there was much rejoicing in the market. However, gold started to shine again. We're back above $1,343. So obviously, I also said this was boosted by the metals, because the metals had a good day yesterday. But if we have a look at it on a daily, it underlines again that the market, the excitement, the euphoria of yesterday doesn't seem to be lasting very long. And again, once again, we are approaching potential all-time highs once again with the yellow metal, showing that the safe haven status is still very, very much in play. I just want to have a look at oil, because oil got a boost a little bit yesterday. But again, today, because the reality is kicking in that we're not out of the woods, it's now back down below $60 a barrel. So we are still trading at the low levels we haven't seen since 2021. Currently trading at $59.58 a barrel. Let's have a look at some other things in the market as well. Let's have a look at the Dow. Okay, Dow, again, also down 1,119 points. Not scary levels. 2,000 points is scary, but still down nonetheless. Down 2.83%. Don't forget, yesterday it rose 8%. So again, reality is kicking in. Let's have a quick look at some of the currencies. Now, we've got currencies in a minute. Let's look at the Mag 7. The Mag 7 had a good day yesterday. Not anymore. Not anymore. Tesla down 6.31%. Meta down 4.58%. Microsoft down 2.93%. Amazon down 3.36%. Alphabet down 2.37%. Nvidia down 5.31%. Apple down 3.38%. Apparently, on Apple, on a side note, they're moving a lot of their phones and production to India to try and avoid, because a lot of the Chinese production, they're moving to India at the moment to try and avoid these tariffs as well. So that's going to be an interesting story to develop. Let's have a quick look at currencies. Euro having a good day. It's actually a very good day. We're seeing a weaker dollar now, again, because that happy feeling is disappearing. Euro's up at 1.11. What's the highest level? What's that? Is that still a 6-month high? Actually, it's coming up close to an 8-month high now on the euro. So the single currency is doing well. British pound, 129, hasn't broken the 130 level. But the dollar yen is what I'm really interested in. Again, back down to 144. It had a brilliant, nice little, let's go on the daily actually, so you can see it properly. So yeah, dollar had a bit of a bull run against it yesterday, with the market all excited that it was all over. But then since then, reality's kicked in. We are indeed seeing a weaker dollar. So yeah, I mean, it goes to illustrate the current market conditions is such a roller coaster at the moment, because it is very much currently dictated by a man and the people around him sitting in the White House. I mean, there's a lot of talk. I mean, even yesterday, for example, before Trump had announced he was going to put a pause on major tariffs, he tweeted, do you still call it a tweet, on his Truth Social platform? Today's a good day to buy. Signed off DJT, Donald J. Trump, which is also the name of his media company. And then several hours later, he then announced he's going to pause the tariffs. So again, this is the thing. You have a market in many ways dictated by this chap and his administration in the White House. I remember days when the market was really driven by economic data, the true intrinsic value, not on whims of somebody. So we are on a very uncertain territory at the moment. And as you can see, we had a very bullish day yesterday with the S&P going on the best rally since 2008. Asia was up today. Europe had a good day. But now, again, reality is kicking in and we are seeing negative, not drastic negatives. Okay, they haven't wiped up the gains made from yesterday's run, but still negative again. And you could argue this could be a bout of profit taking, which is understandable when you have a really exciting rally like that. So you could see it's about a profit taking. But I think the reality is also kicking in because, as I mentioned already, we have still got the massive trade war with China. Okay, we still have 10% baseline tariffs across everybody. 25% tariffs on steel and aluminium is still in place. I said aluminium, just saying it again. 25% on car parts coming into the US still exists. So it's not all gone away. On other news, let's move on from that. Let's talk about something else quickly. A little bit economic data, not that nobody really cares, to be honest, at the moment, because we're all wrapped up with this trade, Trump, tariff saga. But US CPI came in year on year, was announced 2.4% versus 2.6% expected. So lower than expected. So, it's one of the lowest, actually, inflation readings we've had, I think, coming to 4 years on that, which is good. However, as I said in yesterday's video and previous videos this week, this is going to be expected to be the last moderate inflation reading we're going to expect for the coming months, with everything else taking place. Else to come this week, we have US PPI and consumer sentiment, which I think is going to be really important to focus on that, because let's face it, you can't go anywhere without hearing about trade, wars, tariffs, stuff, this. And don't forget, the last consumer sentiment reading was a 2-year low. So I really do think this is going to be a real keen thing to watch, because nobody can get away from this, not even if you're not in the trade or in the industry. It's everywhere, this story. So how it's going to affect the consumer, are we going to see an even lower number tomorrow? Anyway, don't forget, this is indeed a live show. So you can talk to me anytime you wish, or say hello, ask me questions, share with me your opinions. Of course, you can do that anytime if you like. And let me know. And like I say, if you're watching me on YouTube, by all means, subscribe if you like. Hit the notification button so you know next time I'm going live. And if you enjoy this sort of content, by all means, give me one of these as well. It's quite nice to know that you like what we do. As well as that, what I always say, if you don't not watching me live, if you're watching the recordings, because many people go back and watch the recordings. If you're watching the recording and you have a question, we have a point or an opinion, which is all this show is about. It's live. It's supposed to be sharing opinions and things. Put it in the comment section below. I will see it. And I will reply next time I go live, which is every single day, which I'll be going live, of course, again tomorrow. Again, as well as that, if you're watching on Twitter, if you like this sort of thing, by all means, give us a follow. Give us a little heart if you like. It's entirely up to you. Okie dokie. If there is no questions, not a problem. Not a problem. Anywho, in that case, what I will do is I will say this. Till next time, don't forget these little videos are for educational purposes only and in no way whatsoever shall be taken as financial advice. I always suggest you do your own research, do your due diligence, and of course, know the risks at hand for entering any trade. Till next time, every single one of you, trade safe.